Welcome back to Math Concepts. We are continuing to look at the mathematics of personal finance. In this video, we are going to continue our discussion of stocks. Most of you have heard about stocks as a type of investment. And as we discussed in the last video, owning a stock is like owning a little bit of a company. And most of you are probably familiar with like buying and selling shares of stocks, or at least you've heard of it. So in this video, we are going to discuss how profit or loss from shares of stocks work. Before we get into our example, I wanted to look at this example stock table that we have in our textbook. Okay, so it's got various names of companies and the symbols. Okay, so the symbol is like the stock ticker. Okay, so GE is the symbol for General Electric. You've got columns labeled open, high, low, and close. So the open, that tells you the price of the stock when the trading day opened. The column labeled close tells you the price of the stock when the trading day was over. So you can see in this example, GE started at $28.74 and it ended the day at $29.63. The high and the low are the high and low for that day. The net change is the change over the course of the day. So we saw GE opened at $28.74 and it closed at $29.36. That's an increase of 72 cents. Okay, that's why this is here. And this is just the percentage change based on the start of the day. Volume is the number of shares traded. 52-week high and low are the high price and the low price over the course of a year. This is showing the dividend and the dividend yield. That's price to earnings ratio. Don't worry about that for right now. And year-to-date change. Okay, so let's look at an example where we make use of some of the information in this stock table. Okay, so the key idea for this video is you should be able to calculate the profit or loss from selling stock based on a stock table. Okay, so let's pretend in this example that you bought 300 shares of General Electric, 300 shares of stock in GE. And let's pretend that you bought them at the 52-week low and sold them at the 52-week high. So the question we're going to try and answer is, what is your profit or loss on that sale? So here's what we have to look at. We have to look at how much money you spent. Okay, so what was the purchase price? Well, you bought 300 shares. Now let's look at how much that cost you. You bought 300 shares at the 52-week low. All right, the 52-week low for GE was $19.37. So we have 300 times $19.37. Do a quick calculation there. And we get $5,811. Okay, so that's how much it cost you when you bought the stock. Now let's look at how much the stock was worth when you sold it. So you've still got 300 shares, but we are pretending that you sold them at the 52-week high. So when you bought the stock, each share was worth $19.37. When you sold the stock, each share was worth $31.49. Okay, so we do that calculation, 300 times 31.49, and we get $9,447. Okay. Now we can figure out your profit or loss. Okay, you always have to take the selling price minus the purchase price. So we're going to take that $9,447 and subtract $5,811. And we're getting $3,636. If that number is positive, that means you have a profit. If that number is negative, that would mean you have a loss. Okay, so you always have to do it selling price minus the purchase price. Okay, let me add one little thing here. Okay, so buying and selling stock usually has to be done through a broker. So let's take that into account here. So the question we'll ask here is, if your broker charges 2.1% of the total sales price, what is their commission? Okay, well, we just figured out the selling price was $9,447. Your broker is charging 2.1% of that. So we convert to a decimal there, 0.021 times 9,447. And we get, rounded to the nearest penny, $198.39. Okay, so your broker is the person who would arrange the sale of stock through the stock market. Typically that's the way you'll always have to go when you're buying or selling stock. Okay, so if you're looking at the profit or loss from sale of stock, what you need to do is you need to calculate your purchase price and your selling price, and then take the difference. You always have to take selling price minus purchase price. If this number is positive, you have gained money, you've made a profit. If that number is negative, you have lost money. And of course, remember, you have to work through a broker. Your broker is going to charge a commission for doing the work of buying and selling the stock for you. And your broker's commission is usually going to be a percentage of the sale price.